Bloomberg Audio Studios.
Podcasts, radio, news.
Yeah, we've got some aerospace royalty here in the room. As you say, Larry Culp, the CEO and chair of General Electric, the world's biggest jet engine manufacturer. John, this is a company that is newly independent. It's a standalone business. The first time we've seen numbers being reported on that basis, and the numbers we've seen being reported look good and being taken well by the market. The stock, I think, is up circa 3% this morning. It looks like a beat and a raise from Larry Culp. Good morning. Good afternoon, as I probably should say. Nice to have you with us. Thanks for joining us.
Guy, good to be with you.
Talk me through the strength. Talk me through where it has come from. Where is the strength of this beat and raise within the business?
Well, Guy, it's really rooted in the demand that we see both from the airlines and from the airframers for more of what we do. 70% of GE Aerospace on a standalone basis comes in the aftermarket, supporting the airlines with parts, with services of all types to keep today's fleets in the air. And given the activity that they're seeing with the flying public, it's all we can do to keep up with what they'd like to see from us. So the 60+% improvement in earnings, the nearly 20% improvement in free cash that we announced today is really a function of the strength that we're seeing in our commercial engines and services business in the aftermarket.
Is that sustainable? Does that carry on throughout the rest of this year into 2025? Is that something that is here now, gone tomorrow? Because we're starting to see some warnings coming through, particularly from the narrow body operators in the United States and as of the beginning of this week with Ryanair here in Europe.
Well, we've certainly seen those as well. Seems like that commentary is really geared more toward pricing than anything else. But if you look at our order book in the second quarter alone, nearly 40% year over year. We see our utilization of the fleets, both the mature fleet, which we power with the CFM56. Yep. That has been steady, an engine that folks thought might begin to fade. Our newer generation technology, the LEAP engine on both the 737 MAX and the Neo at Airbus, that's probably up 4 points in terms of share. So our utilization could not be higher. Even just looking at the third quarter here, we have probably 90% of our third quarter projection in backlog today with respect to parts. So in terms of the demand signals we're seeing from our customers, things are strong.
So the hours being flown are going to remain consistent, you think?
We believe so. Okay. And going forward, they're going to increase.
That's the kind of the older story. That's the existing fleet that's already out there. As you say, the maintenance story is very strong. The margin off that is very, very strong. The story certainly at the Farnborough Air Show and all the air shows recently and throughout this industry has been what has been happening with the supply chain. Airbus lowering its guidance for the year, talking about engines within that guidance. Is the supply chain story getting better or is it getting worse?
Guy, I'm strongly of the view it's getting better. It's really all about the rate of improvement. Right. And what we shared earlier today with investors is that we didn't have the output that we had anticipated in the second quarter with our newest generation engine in particular, with our LEAP engine. But we're going in using our flight deck, our lean operating model to help our suppliers help us. Jointly problem solving, really understanding constraints at the point of impact. And we saw tremendous results from that in the second quarter. Didn't translate into as many deliveries perhaps as our airframer customers would have liked, but we saw 2/3 of the suppliers that we worked with improve their output to us by nearly twofold. So that's encouraging.
Just kind of talk me through what's happening. So originally the guidance was for a 25% improvement for that engine. Then you went, I think it was in April, you were kind of 10-15. Now you're at kind of flat to 5.
Exactly.
That feels like it's not getting better. You're telling me that it is, though below the surface, getting better.
It's not getting better at the rate that we had anticipated, but it's getting better if you look at the sequential trends. And that, from an operating perspective, that's all that really matters. Week in, week out, quarter in, quarter out, are we seeing more, and are we seeing more predictably? Okay. We're getting better in that regard. I'm encouraged by what I've seen here just in the first 3 weeks of July. A lot of work, not only in the second half still in front of us, but as we think about 25 and 26, but working in that way, yielding those sorts of results, will, I think, put us all on the ramp.
So the benefit comes next year. That's when we start to see the big benefit coming through.
I think some of the actions that we took in the second quarter will help us in the third quarter and in the fourth quarter of this year.
Why is it taking, this was a question I put to Guillaume Faury a little bit earlier on, why is it taking so long to resolve this issue within the supply chain?
Well, I saw Guillaume yesterday. We talk about this every time we're together. I think it's important for everyone to remember, Guy, that we turned the industry down to almost zero during the pandemic. And what we're trying to do now is turn it all the way back on. And that's hard. We lost not only people during the pandemic, we lost a tremendous amount of experience, technical people throughout the supply chain, in Guillaume's facilities at Boeing, at GE Aerospace, and throughout the supply chain. We're building all of that capability back. And because those roles are filled now not by a 58-year-old, but perhaps by a 28-year-old, there's a lot we have to do in terms of not only adding capacity, but capability to meet the ramp that we all are embarked upon.
He told me this morning he thinks we've probably got another couple of years to go, though, until we resolve some of these issues. Does that timeline feel kind of about right to you as well?
We're trying to make progress every week, but I think this is a multi-year effort that the industry faces.
In terms of your, did we bring up Guillaume Faury, how is your relationship changing with Airbus? You traditionally been really tight with Boeing. Tom Enders, who I know well, you know well now, is now on your board. Does that signal a change in relationship with Airbus?
Well, I think we have served both of the major airframers well over time, right? We don't have over 2/3 of the departures in the narrow-body space serving Boeing alone. We're very excited about the news we put out last week with the A321 XLR now approved, but only approved with the GE LEAP 1A, right, our engine. So there's a lot that we're doing with Airbus, not only in terms of the ramp, but next generation technology as well. And we're trying to be as strong and as good a partner to Guillaume and Christian and their teams as we possibly can be. We want to do the same thing with the folks at Boeing, of course. We can do that as long as we invest in technology, use flight deck to deliver safety, quality, delivery, and cost to their requirements, and jointly serve the airlines.
Defense, just spend a moment, if we can, as we conclude things, talking about defense. Do you think defense spending is going up? Do you think a Trump presidency would mean greater defense spending? Do you see defense spending going up in Europe in a Trump presidency because of the requirements in terms of debt to GDP, not debt to GDP, spending to GDP? How do you see that story progressing, and what does it mean ultimately for GE?
Well, I think on both sides of the Atlantic, given the authorities that I speak with, spending will be paced by the threat, and the threat is only increasing. Therefore, be it in combat aircraft, be it in rotary craft, the two areas that we serve most directly, we think we will see, looking out over the next 5 to 10 years, sustained growth.
Just one final quick question before I'm forced to throw back to the studio. Was it an easy decision to continue your contract? Can I 100% rule you out of the Boeing job?
How about 101%?
101%. There you go. 101%. I know the guys in the studio were talking about this a little bit earlier on. So 101%. There you go. John, Lisa, 101%. Larry Culp is staying at GE, and a fantastic set of numbers delivered earlier on today. Looks like the market likes what it hears.